So this is Anishinaabe Development Fund. This is our new logo. You'll see it's different colors from what we had before. There's a whole story to that, but we won't go into that now. That's a different lesson. So what we're going to do today, I'm going to tell you what NADF does and how we can help you. And I'm going to go over the application process in detail so you know what happens when you submit a request for financing to NADF. And I'm also going to give you some good planning tips you can use for writing a quality business plan. We don't always have to hire professional business plan writers to do our business plans. If you know enough about the basics of what we're looking for, you can do it. And we have a very popular program. It's called the Aboriginal Business Financing Program, and it's a grant program. We've been delivering that for over 20 years at NADF, and it's very popular. So I'm going to share a bit of those details with you also. And then when we are done, you're going to be sent an email evaluation. Please fill it in. We want to know how we're doing and how we can be better as we provide services to you. So here's some numbers. Now, stats do not lie, like numbers are real and hard. So in 1 year, like when somebody starts a business, 23% of those people are not going to be around after 12 months. And then down the road, like 2 years later, another 22% of those new businesses are going to fall off the table. So by the end of 2 years, almost 50% of the businesses that start are not around anymore for different reasons. So what we try to do here at NADF is help you understand some of those obstacles you're going to face when you're trying to write your business plan, so you don't become one of these statistics. So here are some things you can think about now. When you're thinking of starting a business, you need to think about, like, what is it I want to make for a living to be okay and comfortable? You may make less than normal wages for a while. For example, if you think about the poverty line in Canada, you know, on the screen here, can people tell me, like, what they think the poverty line is in Canada? It's a range, like it's a number. I see I have many people online. Can somebody answer that? Okay, I'm not seeing the technology side of of your answers. So when somebody, the poverty line in Canada is 19,000. 19,000 for one single adult. And if you're a single parent with one child, the poverty line is 28,000. So that's not a whole lot of money for somebody to make a living on, right? And that's like basic poverty line numbers. So when you're looking at your business plan, you want to make sure that your business is going to be in the right market, that it's going to make enough money for you to cover your basics. And by your basics, you know, that's things like your food, your rent, your clothing, pay off your personal credit cards or your car payments. And on top of that, you want to make enough money to cover the business expenses for the business you're trying to start. The other thing you need to consider is customers can be very demanding. So when you decide that you're going to open up a business, whether you're selling running shoes or you're offering like services such as consulting, you're going to be dealing with people. And people are funny sometimes because when you're running a business, your customer's always right. So when you need to learn how to understand and deal with people who are demanding and critical, because it's these people who are going to be helping you with your sales, right? So we've all seen like the very upset customer getting really mad at the person at the checkout. And it's not even the checkout person's fault, whatever they're getting mad about. So when we go into business, we need to really open ourselves and be available to understand how people are going to react and be ready to deal with them. The other thing is, when you're thinking of starting up a business, it's really hard to do it alone. Your support system. For example, like if you have a husband or a spouse or a girlfriend or a child, or you're looking after somebody in your household, what's the support system you have? Because when you begin a business, it's going to take a lot of your free time away that you normally had to do stuff with them. Now you're focusing more and more of your time, and maybe longer than you thought, on trying to get your business up and started, because you're trying to do your best, right? You're trying to make sure you have enough customers, that the quality of your business products and services is good. So you need to tell your partner, like, when you're starting a business, I'm planning on starting a corner store, or I'm thinking of starting a massage therapy business. So whoever's in your house is going to be affected by what you're trying to do, because it's going to take time away that you used to have with them. So are you in a relationship where your significant other or children are supporting you? Because it's really hard to do a business, because you saw the stats before, about half of them are not going to be around after 2 years. And it's even harder if you're trying to do it on your own. So you need to make sure that you got some support from your family or friends or NADF. And always there's forces around you that you cannot control, and they exist all around us. Like right now, the time we're living in, the whole COVID experience, like, this is something that none of us could predict, and we're living in it now, and our businesses are suffering, and we're trying to come up with ways to make sure people are going to survive. So I've shown you some of the scary stuff about going into business and what you should be considering, but there's also great perks of being your own boss. Creative freedom. So as long as you're not doing anything illegal, you have freedom to run any kind of business you want, and it's yours. Nobody can say you can't do that, as long as you're not breaking the law. The other thing too, when you're starting your own business, it's on your own schedule, because it's yours. It's not like you have to come in and do 9 to 5 and take a 1-hour lunch and 2 15-minute breaks. No, this is your business. You decide what days you're going to work, what hours you're going to work, and the same for staff if you have any. So you get to decide what the schedule is going to be. And the other thing, money. Money is terrific. So when you go into business, you can make as much money as you can and want, because there is no ceiling. Whereas when you work for an organization where you're an employee, you follow wage bands, and you follow performance evaluation type scenarios. Like, there's always a limit as to how much money you're going to earn. Or maybe you can't go any higher till so-and-so retires, and they don't look like they're retiring anytime soon. So you get stuck, right? So the money has a wall, but in a small business, it can be as much as you want to create. And then values. So we all have values. So the type of business you decide to go into, it's usually because of what you value. For example, let's say you like children and you're very nurturing. Well, you may open up a daycare because that's part of your values. Or you may like the outdoors and you're very athletic and energetic and you like competitions. Maybe you're going to open up a sporting goods store. So being your own boss has a number of advantages, and there's a lot of good things to go with it. So like anything, there's good and bad. So we need to look at all sides. So how can we help you? So NADF, our vision is Aboriginal prosperity. This means jobs, the creation of employment, and just having money to be able to live happily. So our mission is to advance the well-being of Aboriginal people in Northern Ontario through business and economic development. So NADF has been around for many years, for 36 years now. We are a nonprofit organization. We are what's called an Aboriginal financial institution, an AFI, and there's several of us across Canada. Our ownership, we have 9 directors and 3 members, and they're all from our different tribal councils in Ontario, Northern Ontario. We are Aboriginally owned and controlled. What makes us different from mainstream banks is we are developmental. So we'll go the extra mile and do extra hand-holding to guide people. And we can't do this by ourselves. So we have several partners. There's the National Aboriginal Capital Corporation Association. There's FedNor, there's INAC, or Indigenous Services Canada, and there's others. There's many programs that NADF delivers. We're a well-running machine because we've done this for a long time. And that's who we are. To give you an idea of like the area we cover, if you look at that little red box, it says 600, 126, and 89. So I usually ask people to guess, like, what do these numbers represent? If you were able to chat with me on the screen here, I would ask you, what do these represent? So 600 is how many First Nations are in Canada. And 126 is the number of First Nations in Ontario. And then of those 126, 89 are the number of First Nations that NADF provides services to. So it's a lot of First Nations that we provide services to. Our geographic area is huge. It's about the size of 2/3 of the province. And many of those communities are remote, meaning you can only access them by airplane, and some of them have winter roads in the wintertime. So the First Nations we cover are in Treaty 9, Treaty 3, Treaty 5, and Robinson Superior. If you're going to get services from us, you have to be living in Northern Ontario, and the business, it can be on or off reserve. If you want to start a business in Cochrane, you could. If you want to start a business in Thunder Bay or Timmins, you could. It doesn't matter as long as the business makes sense. So here's a map. This is showing the different treaties. So the three that are colored, Treaty 9, 5, 3, and Robinson Superior, that's our service area. So what do we offer? We offer business loans up to $250,000. In exceptional cases, we can look at $500,000. We also do the little business loans where somebody may be a home-based business, or they're just starting off small, or they're just testing out the market. Like, say, for example, if somebody was a good seamstress, maybe they just needed money to buy a sewing machine and some material to make some dresses, or maybe they're part of the powwow circuit and they only need a little bit of money just to get started. We do microloans. We also have flexible payment plans. When you come to us for a loan, we're going to work with you. We're going to look at the numbers you have in your sales and your expenses, and we're going to see like what's going to be good for you as a loan payment and us. And we'll give you different options. Recently, we've also started doing commercial mortgages with a term up to 20 years, but we only do this like if it's off reserve. In previous years, the average loan size is $116,000. The interest rate we charge depends on the level of risk of what you're trying to do, and that can range. And then under financing, there's a grant program. I'm going to go into detail with that with you later on in this presentation. So I've told you about the money we can offer. We also do business counseling. So if you had questions about, say, if you're in the middle of doing your business plan, or you had questions relating to how to apply for HST registrations or anything like that, or how to apply for a master business license, you can call us and we can walk you through the steps. If you have like a draft business plan that you want us to look at, we can review it and tell you what's missing or what you need to add. So that's what we do with business counseling. And then another area we focus heavily on is comprehensive community planning. So at NADF, we have designated community planners who go into the communities and work with the communities to develop the community plan for the First Nation. We also do workshops and conferences. This webinar, for example, is an online workshop. I told you about the financing. We also do bookkeeping arrangements. It's very important when you're in business that you maintain your books, because you need those books. We need to see them like every month, every year. We need to know how you're doing. So we'll make arrangements to show you how to do bookkeeping if you're not too sure how to do it, or if you need more training on it. And another important thing we do, we give back and we recognize the successes of our business owners. We have the longest running Aboriginal award show in Canada. Unfortunately, this year we're going to postpone it. So we have our business awards, and then with some of the workshops and conferences we do, like some of the money we make, we give to the Dennis Cromartie Memorial Fund, and those go towards youth scholarships for education. So we do give back that way. NADF, we support new business startups. We'll look at partnerships with non-Aboriginals, but the condition we ask is majority owner, 51% has to be Aboriginally owned. We'll help with joint ventures. We'll do acquisitions. Acquisitions means like if you're buying a business that's already running, we'll help you buy it. If you want to expand the business, if you want to take a look at operating a franchise, we can do that. Winter road activities means during the short winter time, there's a few weeks that communities can access fuel supplies on the winter road at a cheaper cost. So we have loans for that. And again, the business must be operating and based in Northern Ontario. So when somebody's applying to us for a loan, they want to know what happens. Usually they'll submit an application and they'll want a check like a week later. Well, I'm going to tell you what happens when you do apply, because there's a process here, and it's good that you understand what happens to your paperwork and you submit it. So before anybody like applies or gives us an application, you should call us and discuss your business idea before you apply, because there's some things we can walk you through and prepare you for. And that's usually a couple of phone calls, or in normal operating times, you would come in and see us in our office, or we would come and see you. So there's that initial going through your business idea and seeing if it makes sense and if you got everything lined up properly. And also, have you started a business plan? Do you need help with a business plan? Those are the things that we focus on when we talk to you initially. And then after we do that, once you submit a completed loan application, including like a draft business plan, this is when our clock starts, because we want to be fast too. You know, we don't want to keep applications here sitting for 4 or 5 months. Like we internally want to hurry up with your applications. So when you submit a completed loan application to us, that's when we start ticking. So what happens when you submit applications to us? We go through a screening process just to determine to see if you're eligible. And that's done by your account manager. And that could be anywhere from 2 days to 3 weeks. It depends like how much work the account manager has. Just so you know, we have currently 4 account managers. And I told you how many communities we provide services to. So you can see sometimes we're a little bit overloaded, but we do our best to hurry. The next thing that happens, once you've been screened and you seem to meet the criteria, then we're going to go further and do the assessment and the actual approval. And that may take another 3 weeks. And then once that's done, the loan documents are issued, and that may take your account manager maybe up to a week or shorter. Some of our more complicated cases or higher loans, we'll have a lawyer do those loan documents. And then the last part is when the loan is dispersed. So when you get a loan from us, there's usually a couple of conditions that we put on our loan offers to clients. I'll go through with some of those basics with you after, just so you have an idea of what we're looking for. And then overall, to answer your question, how long does this take and what's happening? It's usually 4 to 8 weeks. That's the turnaround time from the time you call us to the time you get your loan out the door and dispersed to you. Now, when we screen applications, we do these every week. Every Tuesday afternoon, that's when we do our screening calls. So there's a few key things that we're looking for, and this is what a screening consists of. We want to make sure that you have your Aboriginal ancestry confirmed, and we do that with First Nation status cards. We want to make sure that you have some money to invest into the business. I'll tell you right now, you need to have at least 10 to 15% cash of whatever you think is whatever you think you're asking for. So we're going to ask to see a recent bank statement showing that you have some money ready to put into the business. And anywhere you go where you're dealing with money, likely it's going to be partly based on your credit history. So we'll do your credit check. If we do turn a lot of people away because their credit is not so good, we tell them how to fix it. They usually fix it and come back. Sometimes all they need is a little bit of credit counseling, and we offer that. The other thing we look at is your related business experience and your education, because you need to have a bit of both for what you're trying to do. We're not asking people to be four-year university graduates all the time, but you need to have some background to show us that you're able to do the business you're asking us to give you a loan for. And then the other big one is a demonstrated market. If we give you a loan, how do we know your business is going to work? So that's how you have to show, yes, there's enough people in my community that would support my restaurant. So there's a bit of work. You have to show us that there's a market for what you're trying to do. So if you get a nod in all these areas, then your chances are really good. We're moving on to the next area, and then we'll do our final assessment and approve it. But going back to this, if your screening is not favorable, like say if you don't have cash equity or your credit rating is so bad, or you can't show us that there's a market for what you're trying to do, or you don't have a status card, then we'll decline you and tell you what you need to do to make it better. So the ideal candidate. So when we are lending, and not just NADF, like this is probably for all organizations that deal with like loans. There's a couple of things we want to make sure that are in place. We want to make sure you have some experience in the business you're trying to do. We want to make sure you have a little bit of money saved up. That's your skin in the game. And we want to make sure that there's a market for the business you're trying to start up. Sometimes some people are more lucky because they come to NADF for financing and they already have a contract. And that's like gold to us because that's guaranteed money coming into the business. But not everybody's that fortunate. So if you don't have a contract, like you have to show us really how you have a market for the business you're trying to do. So you have to do a little bit more of market research. And I'll tell you how to do that later on. And the ideal candidate, of course, we'll do a credit check. Sometimes we'll ask people if somebody will co-sign for them if their credit is not strong enough on their own to get a loan from us. So those are the basic lending considerations. Now, this is the application process. So when you apply to us, before you fill out the application, you should call us because we'll set a few things straight with you first. And then once you submit your application, we're going to do the screening process, which I just explained. So if it's favorable and you're moving on, then we're going to do like our full review where we go through your business plan and ask you some more questions. And then from there, we approve it. And then we're going to give you a loan offer. And then that loan offer is going to say how much we're giving you for what and how long your loan is going to be. And then we're just going to monitor you every year. Like, we're going to check in on you to see how you're doing till your loan is paid off. And that's the process of what happens when you come here for a loan. Approval levels. So we have a couple of different levels. The senior account manager, he can approve loans up to $50,000. If it's a high risk loan, he's also going to need the next person above him to approve it. The loans manager can approve up to $75,000 for low and medium risk projects. But if it's higher, then the loans manager would need the next person above to also approve it, the executive director. The executive director, Brian Davey, he can approve any loan as long as it's low risk. If medium or high risk over $150,000, it's also going to need to go to our board for approval. Now, our board are located all over Northern Ontario. It's not hard for us to pull them in for a quick conference call, like a teleconference. So we're quick that way. So these, when you get your loan documents, there's some typical loan conditions we have. I'm just going to share them with you so you have an idea what may be coming if you do apply with us. So you get your loan package. So it's a stack of little papers. And what it is, it's your letter of offer. And it's also going to show you like a payment schedule saying how much money you're agreeing to pay every month with your interest and how many years you're going to pay it. When we give people loans, they sign a general security agreement, basically saying anything you have now and own in the future belongs to NADF until your loan is paid off. So a general security agreement is like 10 pages long, but in summary, just to make it short for you, that's what it's saying. Everything you have now and everything you own in the future belongs to NADF until your loan is paid off. We also get you to sign a promissory note. A promissory note is just what it sounds like. I promise to pay you back the loan. And sometimes we'll ask the person coming to us for a loan to get a co-signer or a guarantor because their credit rating is not that good. So we'll ask somebody else to co-sign. So it's a big deal when you ask somebody to co-sign for you, because what that is saying is, if I stop making my loan payments for whatever reason, then my mother or my brother, who I asked to co-sign for me, they're on the hook for my loan till it's paid off. So it's a big deal when you're asking somebody to co-sign. Under the section of security, we register all the assets for loan security in this thing called the Personal Property Security Act, the PPSA. So for example, if you come to us for a grader and a loader, we're going to take the serial number and identification number of those two units, and we're going to register them in this system. And what that tells anybody who's trying to buy or sell those two units, that they belong to NADF because we gave a loan for it. So the day you pay off the loan, the last payment, then we release that security. So it's no longer NADF's and you can do whatever you want with it. Another thing we do, we'll get insurance. For example, if you're running a restaurant or hotel and let's say something happens and there's a fire and it's totally destroyed, we ask for loan loss insurance. So what that means is if you still have a loan with us, like NADF will get paid off the balance of the loan that's still owing to us because of the loss. And if you get a good enough policy, like you should be able to rebuild your building that was lost in the fire. Specific for businesses operating in First Nations, we do ask for a band council resolution granting us access into the community in case of loan default. So when we're dealing with loans in First Nations, we get a BCR from the current chief and council saying, okay, NADF is allowed to come into the community if so-and-so just stops paying on their loan. Another big thing is bookkeeping. When you get a loan from us, we're going to ask you for copies of your financial statements every year, or maybe even every month until your loan is paid off. What we do, we send you your monthly loan balance statements. We send that to you every month. NADF reports to Equifax. So this is reporting on your loan activity with us. So if you're paying us regularly with no issues or hiccups, your reporting to Equifax is fine. Sometimes things happen where something happened, like an accident, or you couldn't make your loan payment. If you call us and explain the situation, we'll take that into consideration, and it's not going to negatively impact your Equifax. So if you work with us, we want you to succeed, right? So if you're having like a tough month, tell us what's happening and how you plan on getting it back to normal. Then we won't report you as a skipped or a bounced payment. And it's important to maintain regular contact. So even though like our clients are far away from us, it's not hard to send emails or pick up a phone call. We like to hear from you too. Now we're going to get into the aspect about business structure. So this is legal things. When you look at our application forms, whether it's for the loan application or the grant application, it's pretty clear. We're asking you, what are you? Are you a sole proprietorship? Are you a partnership, or are you a corporation? Because depending on what you are, it's going to have different impacts on taxes and liability and other things. So sole proprietor, just the way it sounds, sole, one, that means there's only one owner. It's very affordable to be a sole proprietor because there's not much registration you have to do. When you're the sole proprietor, you make all the decisions. You can have employees working under you, but still at the end of the day, you're the one owner. The con about being a sole proprietorship is it has unlimited liability. So I'm going to give you two scenarios. Say if you're in Fort Hope. If you're a sole proprietor, you have unlimited liability. That means if something happened in your business, like somebody fell and they hurt themselves really bad, they could sue you. So that's what happens if you're a sole proprietor. They can sue you for everything you have in your name. Okay. Whereas the corporation one, I know I'm jumping down. When you're applying as a corporation, it's because you've created a new entity. Like it's separate from me and separate from you. Like it's a brand new, it's like you're creating a new person, like a new entity for the government to tax. The nice thing about being a corporation, it's got limited liability. So what that means is, say if I'm running my automotive shop and I've made it a corporation. So because it's a corporation, it has limited liability. So say somebody comes in and the car I'm working on falls on somebody. So that person is going to sue the corporation for everything that belongs to the corporation. But they're not going to sue me for my house or my car or my other personal items because I've separated it. What belongs to me, but what belongs to the corporation is separate. And that's what they're suing people for the assets of the corporation. But let me just go back to the other ones. So a sole proprietor is when it's only you applying. We also get scenarios where two or more people come in and they want to do a partnership. We always ask them, well, why do you want to go into partnership with somebody? Because it's like a marriage. Like, what does each person bring to the table for you to want to work together with this person? When you go into partnership, we ask people like, who's going to share? Like, what is the sharing of profits? Is it 50-50? And if things go bad, like who gets to keep the assets? And who's stuck paying the bills? So when people are coming together to do a partnership, we ask them to bring together a partnership agreement. And that partnership agreement, it goes through all those details of what may happen down the road, because it's good for both partners to understand like what the expectation is on how that business is going to operate, whether it's successful or if it falls apart. So we do ask people for partnership agreements, and we have templates for that. Now, if you're applying as a corporation, if you're living in the First Nation community and you have a corporation, you need to understand just because it's a corporation does not mean it's tax exempt. So when you're applying to us, we're going to go through this with you. You just need to know that just because you're operating in a First Nation community as a corporation does not necessarily mean you're tax exempt. A corporation doesn't have a status card. The things with a corporation is owned by a shareholder or shareholders. Examples we see often is like the shareholder and the director are the same person. That's fine. That's what we see quite often. When you're looking at forming a corporation, you can do it online for about $400. Or you can go see a lawyer to help you do it, and they can explain it better to you. But that'll cost like, you're going from like $400 doing it yourself to a couple of $1,000s to go see a lawyer. And maybe you need the expertise of a lawyer. So these are the basic types of business structures we come across. And when we ask you which one are you, and if you're not sure, we'll walk you through these scenarios and see which one you think you are. So a master business license and articles of incorporation. A master business license is a piece of paper. I'll show you what one looks like. It's just saying you're operating a business, and it's telling the person what type of legal structure you are, whether you're a sole proprietorship or a partnership. When you have a master business license, it's good for 5 years. You need this one piece of paper to go open up a business bank account. And it also, wholesalers, like if you're dealing in retail, wholesalers want to see that you're a registered business. So they're going to ask you for a copy of your master business license. And you can get that with the Ontario Ministry of Finance. It's usually $60 to $80. And here's the website where you can go have a look. When you apply online, they ask you very simple questions, and you can get it instantly if you're paying with a credit card. They're going to ask you your name, your address, and then they're going to ask you the name of your business, and then they're going to ask you if you're going to have employees, because that'll trigger them for you to get like an employee remittance numbers from the Canada Revenue Agency. And then they're also going to ask you if you plan on exporting any of your products, because that'll trigger Export Canada numbers. So a master business license, it's good to have. We don't make people get one of these, but it's good to have because these are all the benefits. You need it to open up a business account, so it's a good idea to get one. Usually, people will apply and then they'll get the master business license after they're somewhere through the process with us. Here's a sample of what our master business license looks like. On the top, you can see the mailing address. It's not very clear to me. I don't know if you can see it well, but it's saying what type of business it is, the telephone number. And then on the bottom, it's saying it'll give you the number of the business and the start date and the end date. So these are renewed every 5 years. So it's a one-page document. It takes a couple of minutes to apply online to get one. If you have questions or you're having trouble trying to get one yourself, call us and we'll walk you through it. Back here, I wanted to mention so back here on the, with the articles of incorporation, like I said, it's going to cost you anywhere from $400 to a couple $1,000s to get one. That's equivalent to a master business license. And I think I have some questions here. Okay, Vernon, is a sole proprietor route tax exempt? Okay, good question. When you're operating a sole proprietorship on a First Nation, yes, you're tax exempt. When you're operating a sole proprietorship in town, you have to pay taxes. Rose has a question. Insurance was an issue for one person. It was just a microloan. Any help for that? Well, sometimes when we're looking at the microloans, we go case by case. We don't always make you get insurance. No, the idea of a microloan is to see if your business can start off small, and we want to see you succeed with that. So we're not going to put barriers for people trying to start off with a really small loan. Good questions. Okay, now I can see the questions. Thank you. Those are very nice questions. Okay. So the GST and HST, do I need to register? So in a short answer, yes, new businesses must register for the HST unless if they are a small supplier. So here's what you need to know. If your sales are $30,000 or less annually, you're not required to register for or collect Ontario HST. So if you're a small little business and you're not making more than $30,000 in sales revenues in 12 months, don't worry about it. You're too small for the government. You can register for the GST, HST with the Canada Revenue Agency. They're going to provide you with a business number. And you can also register for other CRA programs when you're doing that, including say if you're a corporation, you'll have to register for the corporation income tax, payroll, and import and export taxes, like if you're going down that route. You're going to need to provide some basic information, your legal name, the address of your corporation. And if you're a sole proprietor or a partnership, you're going to need to provide your full name, description of your business activity, and your address and your phone number. They're not hard to do. So now I'm going to go into a little bit about business plans to simplify them. We want you to make a business plan. Like if you're coming to us for a loan, we want to see you've tried to make a business plan. So the options you have, it can be just a few pages. You know, some businesses are very simple. Like you're just providing a service or selling a product. It doesn't have to be complicated. You can also do a lean business model canvas, which I'm not going to do right now. What I'm going to explain to you, though, is to do a typical business plan and how to apply for a business planning grant if you wanted to do that. So I see Melanie has a question. If your business is on reserve, do you need to get a HST number? Melanie, if your business is making less than $30,000 in sales a year, you don't need to. Who has had lunch yet? So sometimes when we're learning new concepts, it's good to have a visual. Some people are more visual, and that helps. So what we're trying to do here, when you look at a hamburger, the top is one piece, and then the filler with all the colorful ingredients, like that's the meat of it, right? That's where lots of stuff's going on. And then what's holding it all together is the bottom. So if we take this picture and apply it to the concept of you writing your business plan, it's going to help you because we do it in pieces. It's very hard to tell somebody, go write your business plan. It's much easier to do it in little pieces and explain each little piece and why you need it. And that's what we're going to do here today. So there's 3 parts here. So there's the introduction. So the introduction tells us the purpose of what you're trying to do. It tells us what your business is, your background, and your opportunity. So that, that could be like 3 or 4 sentences. It doesn't have to be fancy. And that represents the top of the bun. Okay, that's the front part. So for this to make more sense to you, I'm going to do this example of the business plan where I'm pretending I'm opening up a business. Okay, and your business ideas are going to be different. So, but they should all kind of have these pieces in there outlined and talked about in your business plan. So here's my example. I'm going to open up a bookkeeping business because I'm an accountant. So my purpose is, in my business, I'm going to open up a bookkeeping business here in Timmins. My background, I'm an accountant. I went to school to be an accountant. I'm a CPA. And the opportunity is there's only 3 other accounting companies in Timmins. So I think there's a market for me to do some accounting for other businesses. See, that's only like 4 or 5 sentences. That's my introduction. We're trying to let you know that you don't have to be scared about trying to write your own business plan, as long as you make sense and we can understand you. Now, the middle of that hamburger is the operations. This is where we have our pickles, our mustards, our sauce, our bacon, cheese, everything. So when you're writing your business plan, you kind of see it in your head. It's important. You need to take what you have in your head and put it in words because we need to see what you're envisioning. So if I walk into your business and I open a door, what am I going to see? That's what you need to explain when you're writing your business plan. Okay, because you're taking your ideas, putting them on words for a funder to figure out what you're trying to do. So when we break this down, that's the operations. So in your business plan, these are the headings you should have or could have. And you just want to talk about a little bit of them so we know what you're trying to do. So under products and services, continuing with my bookkeeping example, I'm going to say I'm offering bookkeeping services at $80 an hour. There's my prices. Management. Well, I'm just a one-person show. Okay, I'm just a one-person show. So I'm the manager. My market is all those businesses in Timmins, and I'm going to. That's where I'm going to be doing bookkeeping for all those businesses that need somebody to do their bookkeeping. Human resources, right now, I'm just going to be the only one, just me. The bookkeeping, I'm going to be doing the bookkeeping part of it because I'm an accountant, right? Technology, to do this business, I'm going to need 2 laptops and maybe an iPad and a printer. That's my technology, and a cell phone. Advertising, I'm going to have a few business cards made up, and I'm also going to have a website made up. My suppliers for my bookkeeping business are, I'm going to get some stuff from Home Depot, and maybe sometimes I might go to Walmart to get a few things. But those are my suppliers. I don't need a lot of supplies as a bookkeeping business. Bylaws, because I'm going to be setting up this business in Timmins, I need to make sure I register for my master business license. Regulations, and I need to, depending on what kind of business you're in, there's different regulations. If you have a business idea, we'll tell you what they are because we've done lots of these. Each business is different. For a bookkeeping business, there wouldn't be very many regulations other than me as a CPA. I have to make sure my CPA is in good order. And I'm not, like sometimes even the city you're operating, they have bylaws as to like where you can set up a business. So I probably have to go rent an office somewhere or maybe just use one room in my house. We are running out of time. I think I have about maybe 14 minutes, and the content I have here, I don't think I'm going to get through it, but I'm going to go quickly. So what I just explained to you is the operations. So those are the main things we want to know things about. So under each, just give us a few sentences about what each one means to your business. And then the bottom of the bun is what's holding it all together, right? So these are the financial part. These are the number pieces. So when you're doing a business plan, it's good to talk about your operations and all that. But it's really important for you to have an idea how to do the financial pieces. People get scared when somebody asks them, okay, we want financial statements and balance sheets. If you haven't gone to school to do those things, you won't get it. And that's okay. What we're saying to you, as long as you do a cash flow, which is a 12-month pretend number thing into the future, that's where we start with you. So everybody here on this webinar, like if I have enough time, when you leave here, you'll know how to do a cash flow. So a cash flow is just like money in and money out. And I'm going to show you an example. But those things like the balance sheets and the income statements, like we only get to those after we do a cash flow. So the cash flow is the starting piece. When we're looking at financials, everything you want a loan for, you need to get quotes for all of it. If you're looking for equipment, inventory, shipping, training, everything you want a loan for, you have to go get a quote for it. So I see somebody has a question. I answered Melanie's question, Vernon's question. Dawn, can you tell me what the question is?
Hi, Kim. Sorry, I thought I didn't hear you answer Melanie's question.
When you're doing a business plan, at the back, you should include your appendixes. And these are things like, this one's like an example for a restaurant. If you have your resumes, menus, and the layout of the restaurant, include them. If you have a copy of the master business license, include it. When you're handling food in Ontario, you need a food handler certificate, so include it. Everything you want has to be supported with a quote. If you've gone out and done a market survey, in your community to support your business request, include that. If you don't know how to do a market survey, we can help you do one, or you can share what you have and we can see what you need to improve or fix up with it. If you have insurance quotes, include that. So when you're coming for a loan, we want to know, can you repay back the loan? Is there a demand for your business? And most importantly, can you manage a business? And then if we give you a loan, what's our security, just in case if you decide you can't pay us back or you don't want to pay us back? So that's what a lender is looking at. Over the years, I've been at NADF for a long time. I've seen hundreds and hundreds of business plans. So there's some common themes that come up when people are doing business plans. Here's some of them. When people are doing their sales projections, they'll go in year one, they're going to make 300,000. By year two, they're making 2 million, and they don't explain or provide any details how they got from 300,000 to 2 million in sales. So you need to write down your notes why you think your sales are going to go up that much. The other one is they don't do enough homework. They overestimate the market. They think that if they build a convenience store, everybody's going to come to their convenience store. And then sometimes it's just not knowing who the target market is. Somebody will call with a business idea, and then we'll ask the question like, who are your target customers? And then they'll say everybody. It can't be everybody. It's got to be a certain portion of that market you're looking at. And we can explain that further. The other big one is like, you're so in love with your business idea, you don't know who you're competing with, because there's probably somebody already doing the similar business in your community or nearby. Another one is hiring somebody, paying somebody to do your business plan, and you don't even you don't meet with them. You don't go over what they're writing in your business plan. They're just doing a job and they're going to get paid. They're going to walk away and you're stuck with that business plan. So if you hire somebody to do a business plan with you, you need to meet with them and go through it together. The other biggie, relying on our nice family and friends for free labor. That really works out sometimes, like in the start. But, people who spend a lot of time in your business, like they have bills to pay too. And they want to get paid. So watch out when you ask for family and friends for help. It may work if somebody's retired and they're just volunteering, great. But it's hard to rely on free labor. Another big one is like starting up a business, getting a loan for it, and then kind of walking away from it, letting somebody else run it and be in charge of it for you. You might go there and check it out once a week, but you're not there. You're what we call absentee management. Another big one is not caring about your bookkeeping. When you don't care about your bookkeeping, you're going to run into problems with paying suppliers because you never know what you have in the bank. Staff, if you don't pay your staff or do proper government remittances, you're going to get in big trouble with the Canada Revenue Agency. And cash flow, you need to know what you have in your account to pay your suppliers and keep your business going and to pay your employees. Another big one is not separating personal and business bank accounts. And another one is the shock of time commitment required just to run a business. So we have less than 5 minutes left here on this webinar. So to summarize, when you're starting up a business, there's a need and a want that you've identified. You're researching your idea. So this is where we can help you while you're piecing together your business plan or you're hiring somebody to do your business plan. This is the research idea. Then you're going to find out how much everything's going to cost to get your business up and running. Then you go get the money, then you do it. We're going to have to resume this webinar because I have 4 business tools. They would give you confidence to support your business case when you're applying for a loan. And there are 4 little tools that one's a competition analysis, one is a strengths, weaknesses, opportunities, threat, one is one on market research, and the other one is an actual cash flow exercise where I would walk you through, show you how you make one and how you use it. So for now, because I think we're going to have to stop here for this webinar. I will continue with the 4 business tools on another webinar. And I'm going to open it up to for questions. In addition to these 4 business tools, we also need time to go through the Aboriginal Business Financing Grant Program. There's conditions and criteria and formulas for that one that I need some time to go through. Can you touch base on what burnout is for new business owners and what to look out for? Good question, Jamie Hunter. So burnout, I think we all have an idea what burnout is. It's when you're constantly running the business all weekend, every weekday. You're not taking much time for yourself to recoup and clear your thoughts. Then you start not enjoying running your business. Maybe you don't even want to go there anymore. Lots of things can happen when you go through burnout. So we go back to that. Who do you have for a support system when you're starting a new business? So that could be your friends and family. It could be your lenders. Like if you're experiencing some trouble with your business and it's not what you thought it would be, if you were our client, we would see how we could salvage you and help you with your business, because we want you to succeed. Because if you succeed, then it's good for us, and the money you give us back, we can lend it to other businesses. Is that good, Jamie? All right. So I thank everybody who called in on the webinar. I needed more time to finish off the material I wanted to share with you. So I maybe I spoke too slow, but the 4 business tools and the Aboriginal Business Financing Program are very important, and they're good for you to have more knowledge of. And we will come back with a part 2 to this webinar. And we are almost finished.
Thank you for joining us, everybody, and we hope to see you again for part 2. We'll be posting that on our website and on our social media as well. And if you have any questions, please feel free to reach out to NADF. You can visit us online at www.nadf.org or email us at info@nadf.org. Thank you for joining us, and we hope to see you again. Bye-bye.